It may look like toothpaste, but this 3D printing technology is spitting out a 1,900 square foot house. This is the final product.
We're trying to build houses in half the time for half the price.
Hey everyone, Ben here. 3D printing is a technology which is set to transform our lives, with many applications from building homes in less than 48 hours to healthcare, manufacturing, and many, many more. So in this video, I'm going to dive into the top 5 holdings in ARK Invest 3D printing ETF. I'm also going to briefly dive into the industry and why 3D printing is becoming vastly important. But before we dive right in, if you're new around here, feel free to join the investing family by hitting that subscribe button and turning that notification bell on. If you do find any value in this video at all, feel free to give it a big thumbs up. That helps out tremendously with the YouTube AI. And with that being said, let's dive in. So firstly, what's so special about 3D printing? Didn't we hear about 3D printing a few years ago? Everybody was hyping about 3D printing, saying that there was going to be a 3D printing shop on every corner in every major city. And then we didn't hear anything. It just seemed to be unpractical, cost a lot. Well, things seem to be changing right now. So first, diving into the statistic here by Deloitte. So the 3D printing industry is poised to grow at approximately 12.5% in the next few years, more than double its growth rate just a few years ago. So what's changed in the 3D printing industry? Why is it suddenly poised for growth? Well, one of the main indicators of any new technology being widely adopted is the cost curve of this technology. So if the cost for producing this technology and using this technology is decreasing over time, then this means the adoption of this technology tends to increase. And at the moment, this is happening with 3D printing. So diving into this article here, we can see this graph here, 3D printing growth and cost projection. And the cost of 3D printing is the red line. And as we can see here, from 2012 to 2020, this has been steadily decreasing, and the volume in 3D printing is also been increasing. So we can see the cost curve is declining, and that's great to see for 3D printing technology. But then of course there's all the other inherent benefits of using 3D printing. 3D printing makes it easier to manufacture complex geometries. So if you want to manufacture a really complex part for, let's say, a vehicle, let's say an electric vehicle, or let's say an internal part which is going to be used in someone's body for surgery, then 3D printing is a great use case. You've also got lead time reduction, weight reduction, cost savings, simplified assembly, supply chain management, mass customization, and quick iteration. So that's why 3D printing is so popular for prototype parts. With 3D printing, we can see the unit cost is virtually the same, whether you're producing just 1 unit or 1,000 units or 16,000 units. Whereas with injection molding, if you want to produce just a couple of units, then it can be really expensive, as we can see from this graph here. So to produce just a couple of units using injection molding, you can pay upwards of $10,000, whereas with 3D printing, this could be just $1 per unit. And then on the supply chain management side, there is many benefits of using 3D printing technology. It is estimated that 15 to 25% of inventory is scrapped each year because it's not sold. There is also the warehousing costs of that inventory, which can add another 5 to 15% to the cost of the product. Thus, 3D printing can help improve lean manufacturing or just-in-time manufacturing. So you're creating these products just as the demand is there for the products. So that's why 3D printing could be poised for growth right now. And that's why we're going to dive into these top 5 stocks by ARK's 3D printing ETF. So ARK's 3D printing ETF, ticker symbol PRNT. Now this is not an active ETF, this is basically like an index fund. And we're going to dive into the top 5 units. So ARK believes 3D printing is one of the highest growth potential industries in the economy and is set to transform the manufacturing landscape. So diving into stock number 1, and this is ARK Invest's biggest bet, and this is X1, ticker symbol XONE. So this makes up 9.4%. So that's incredible because that's the largest holding in this ETF. So that means ARK Invest must be extremely bullish on this company. So what does this company do? Well, this company seems to manufacture a variety of different types of mass 3D printers. So as you can see here, they've got their X1 160 Pro, which is our largest and most advanced metal binder jetting system for sustainable high quality production. So they've got various types of metal 3D printers, sand 3D printers, metal design lab across a variety of industries from aerospace to automotive to medical, dental, oil and gas, R&D, and many, many more. So very interesting company here. Diving into the share price here, we can see the share price for X1 was approximately $10 to $13 per share back in December 2020, and then boom, it skyrocketed by 579%, guys, in just a couple of months. So congratulations to those of you guys who invested into X1. But if you were left holding the bag when there was this major decline here, now this is a big decline, 45% down from that point, but that could mean it could be a potential opening, a potential buying opportunity. Of course, I'd say do some extra research, guys, and check the reason for this decline. But the market cap of this company is very small, $711 million. So this is a small cap company, so do expect a lot of volatility with that share price, but also a lot of growth potential in the future. So let's just dive straight into the numbers for X1. We're here on Stockopedia. This is a platform I use all the time to analyze stocks. Each stock is given a stock rank and it helps you to quickly analyze stocks. So if you guys wish to check it out and see if it fits your investing style, I've actually got an exclusive 25% off discount link, exclusive only for the viewers, that's you guys, of Motivation to Invest. So if you wish to check that out, I'll leave a link for that in the description below. Let's dive into these numbers. So this company's got a stock rank of 53, which isn't that high really. Momentum of 85, so a lot of momentum, a lot of bullish technical indicators on the stock at the moment. Value 25, quality 48. Let's dive into the growth rate. Growth's been quite slow, 3.95%. $68 million growth predicted by 2021, so still a small cap company. Unprofitable company, and these are 3D printing companies at the moment. They seem to be very sort of high risk, high reward, and this is what ARK Invest seems to be betting on. However, the sales growth over this past year has been immensely good, so 59.86%. So that's what I do like to see. I look for a growth stock, anything growing between 15 and 20% per year. At least this has got 59%, which is incredible. Balance sheet's looking pretty strong also, with a current ratio of 2.79. So that's your short-term assets on the balance sheet, such as cash, against your short-term liabilities. That's those due within the next 12 months. And generally, I look for at least 1.5 to 2. This has a 2.79, which is great to see. So revenue is forecasted to increase for 2021, which is great to see, as is net income. So the company's getting closer and closer to profitability. Of course, many growth companies tend to be reinvesting a lot for growth. Diving into the analyst consensus, we've got 1 hold, 1 buy, and 3 strong buy. So more on the buy side there, which is great to see. Price to sales. So this is the only metric we can look at in terms of valuation for this company. So it's a 12, not too bad. It's not amazing. So you're paying 12 times the company's sales at the moment, even with this major decline. Still definitely one to watch and potentially invest into after this major decline. This could definitely be a potential investing opportunity. Of course, after you've done your own due diligence and research. Right, on to stock number 2 is the creatively named 3D Systems Corp. So 3D Systems Corp's ticker symbol is DDD, and this makes up 5.4% of the ETF. So diving into 3D Systems Corp, so this aims to solve complex engineering problems with additive manufacturing, which is another name for 3D printing. So this company works in the healthcare industry, the dental industry, and the industrial industry with aerospace, defense, automotive, jewelry, consumer products, and many, many more. The share price was around $7 to $10 per share. January the 6th, 2021, boom, 392% increase, which was incredible. And then the sharp pullback. This could be due to the major market correction with interest rates rising. So perhaps that did cause us pullback on these 3D printing stocks. So down 32% could be a potential opportunity. Market cap just $4.45 billion. So this company is headquartered in Rock Hill, South Carolina, and is a company that engineers, manufactures, and sells 3D printers, 3D printed materials, 3D scanners, and offers a 3D printing service. So let's dive straight into the numbers here, these juicy financials for 3D Systems. And as you can see here, over the past few years, the growth rate's not been that great, to be honest. It's been quite steady, around $600 million. The company was unprofitable, forecasted to become profitable this year in 2021 with $26 million in profits. Sales growth last year was pretty poor also, minus 12%. So it seems people are investing in these stocks on a lot of future potential. expected with these companies, because at the moment the growth doesn't seem great, but then we have had a global health crisis, so perhaps you could take that into account. Analyst consensus, free sell. Whoa, watch out with this one, guys. Free hold, to buy. Now, generally, a lot of these analysts tend to have personal relationships with these companies. So when you see a sell, that can actually be a big red flag. So we've got people here from JP Morgan, and many, many more. Price of sales is actually lower than the previous company we looked at, with a price of sales of 8.15, but the growth does seem a lot less. So for me personally, I prefer the previous company we looked at, and so does ARK, as it seems it's his largest position. Okay, diving into stock number 3 is a surprising one, and that is HP, or Hewlett Packard. So the ticker symbol for this company is HPQ, and this makes up 4.95% of the ETF. So diving into HP here, we know HP, the computer company, they make laptops and many more technological devices, but they also do 3D printing. So this is their 3D printing solutions here. So it seems HP doesn't just sell the normal bog standard paper printers, it actually sells 3D printers. So that could be a great one to look at if you want some diversification in a 3D printing stock. So you want a company which isn't a pure 3D printing play, but also has other avenues of revenue. Diving into the share price for HP, of course, a lot more of a stable company. Market cap $36 billion. I believe that's a mid cap. Dividend yield 2.61. So you also get a nice dividend with growth potential. So from October, the stock is up 62%, but fairly stable. And I would expect a lot more stability from a company like this, but maybe with a little bit less upside. But then you get that 2.68% dividend. So it's whatever fits your investing style. Diving into the juicy financials here for HP, this company has a stock rank of 97. So really sort of top end there. High momentum, high value, and high quality, as we can see here. Revenue growth over the past few years is incredibly high. So $55 billion in revenue, but it's been quite stable at this level for the past few years, which is why the company seems to be paying out a dividend. The company is profitable, not really a major growth play from what I can see here, but with their 3D printing side of the business, that could mean this dividend is sustainable and will continue to grow. So I can see projections here for the dividend to actually increase to 3.1% by 2022. So revenue, yeah, quite stable for 2020, 2022. Net income's forecast to increase as its earnings per share. So this company is really focusing on profitability and then returning that cash to shareholders via a dividend. Analyst consensus: 2 sell, 9 hold, 3 buy, and 2 strong buy. So that's quite surprising there. Current ratio is actually quite bad. So the short-term debt of this company, 0.79. So basically, I look for at least 1.5, usually 1 at a very minimum. 0.79, not great. But then again, this company's profitable. So generally, if a company's unprofitable, it definitely needs to have a really strong current ratio, strong balance sheet, especially in the short term. If a company's profitable, it has plenty of cash to cover its debt. So maybe they're operating with a little bit more debt now in order to grow. That's just something to check up, but I don't consider that a major worry with this company. Price of sales, great valuation, just 0.62. So you're basically paying 60 cents for every dollar of this company's sales. P ratio's also great, 11.3. So great valuation, great dividend, slight technological play, not really as high growth as the other plays in this list. On to stock number 4 is Stratasys Limited, ticker symbol SSYS, and this makes up 4.6% of the ETF. So Stratasys is an American-Israeli manufacturer of 3D printing and 3D production systems for office-based rapid prototyping and direct digital manufacturing solutions. So this company is incorporated in Israel. Yet steady growth again, not really a growing company, slight decrease in revenues around $500 million. Unprofitable, forecasted to become profitable 2021. It also qualifies for a screen of short selling, so just be aware of that, guys. There's a lot of momentum behind these 3D printing stocks right now because people are betting on the technology to basically increase in adoption and the cost to continue to be lowered. Analyst consensus: 1 strong sell, 2 sell, 4 hold, 1 buy, 1 strong side, 1 buy. Sales growth over the last year minus 18% down. Current ratio 4.4. So balance sheet strong in the short term. That's interesting with these 3D printing stocks. The fundamentals are not that great in terms of the numbers at the moment, yet the stock seems to be doubling, tripling in price, and I think that's basically on momentum, as I can see here from the Stockopedia score of 81. So there's a lot of momentum, there's a lot of short-term bullish momentum on these stocks due to their future potential. Price of sales of 3.45, so not too bad. But yeah, this company's unprofitable at the moment. They do reinvest for growth, these growth companies, but still, yeah, definitely a very interesting one to watch. It's also pulled back massively, so that definitely seems like a major market correction on the 3D printing stocks. Now, onto stock number 5, I'm going to dive into one that's a little bit further down on this list, but still a similar weighting in the ETF, and this is PTC Incorporated. Ticker symbol PTC, and this makes up 4.49% of the ETF. Now, the reason I've picked this one is this just seems a little bit more of an interesting company. So this is a software company with competitors such as Autodesk, which I am invested into. And this company's also diversifying into other areas now, including the Internet of Things, augmented reality, collaboration software, and many, many more. And they've actually got quite a cool 3D visual experience of their office. So if you click here, take the virtual tour, this is quite cool. So we've got their whole office here, and you can basically walk around their office in Boston. And if people are bored working from home, they can just be like, okay, I miss the office, so I'm going to go and walk around the office in 3D. But yeah, so some people must be doing it. But you can actually basically walk through and see their different sort of exhibitions and see basically the different customers they work with. The same way you might go around and have an office tour. So they also work with Carlsberg. I'm assuming they get pints in the office there. So they're doing something with Carlsberg with regards to increasing their manufacturing efficiency, as you can see here. So it's quite cool sort of technology, walking around their office there. And you can check out and find a little bit more about the business. So right, dive into the share price here. Around $80, and it's increased massively by 66%. I do like software companies because they have high margins in general and they find it easier to scale. Market cap 16 billion, so yeah, more of a small to medium cap company. The company has over 1,150 technology partners, over 6,000 employees across 80 offices in 30 countries. So this is a major sort of player. PTC. So diving into the growth rate here, around 3%. So the company's revenue is around 1.7 billion at the moment. Profitable company, which is great to see. Over the past year, sales growth has increased by 20%. I can imagine an increasing adoption of even that previous system we just saw, which is just really a 3D camera tour. I can imagine increasing adoption of that definitely during 2020 with the global lockdown going on. So nice 20% growth there this past year. So this definitely could be a major one to watch, and probably the best one on this list I can see so far. Everything's forecast to increase revenues, profitability. Analyst consensus 3 hold, 8 buy, 5 a strong buy. So I do like PTC a lot. Current ratio 1.3, that's fine. It's a profitable company. Price of sales of 10, so you're paying 10 times the company's sales. P ratio 39, a little bit on the high side. PEG ratio 1.1, that's not too bad. So yeah, very interesting company. Probably one of the most stable on this list with a lot of growth potential also. So PTC is probably the best overall business, but maybe the first one on this list is probably the best if you want that high risk, high reward growth potential play. Now that's just my personal opinion. This is not financial advice. Like all the stocks I mentioned on this channel, always do your own due diligence and research before investing into any stock I mention on this channel. And with that being said, if you guys found any value in this video, feel free to give it a big thumbs up. That helps out tremendously with the YouTube AI. If you're new around here and you still haven't subscribed, feel free to join the investing family by hitting that subscribe button and turning that notification bell on. And if you do want to take things one step further and find out exactly which stocks I'm buying, which stocks I'm selling, and access my entire portfolio and join a thriving community of some of the finest people on the internet, then feel free to check out that first link in the description below for the VIP membership group. And with that being said, thank you guys so much for watching. I hope you have an incredible day, and I'll see you in my next video. Invest safe.